You should watch out for this year's bank crisis and its effect on Chicago. Hi, I'm Gabby with Nex-Gen Real Estate and Property Management Company serving Chicagoland in all things real estate. The aim of this channel is to keep you informed of news, development, and current events that affect Chicago's real estate market and investment opportunities. Today, I will discuss the 2023 bank crisis and its impact on Chicago and the real estate industry. In March, 3 U.S. banks fell so quickly, followed by the second largest bank in Switzerland, Credit Suisse. The failure of these banks alarmed the whole world, more than simply investors, lenders, and financial institutions. This bank crisis played like a pile of dominoes that crashed from one collapse to another. First, Silvergate Bank announced the winding down of its operations on March 8th of 2023 due to the losses suffered in its loan portfolio. 2 days later, Silicon Valley Bank also collapsed from the bank run. Then on March 12th, regulators shut down Signature Bank, citing systemic risks. The California-based Silvergate Bank and New York-based Signature Bank worked as the two primary banks for cryptocurrency businesses. On the other hand, Silicon Valley Bank caters to the companies of its communities. The SVB's clients ranged from venture capital firms, startups, to wealthy tech workers. Unlike Silvergate, the Signature, who were affected by the cryptocurrency turmoil since last year, SVB's troubles stemmed from the downward spiral of the tech industry and the Fed's raising of interest rates. Startups and venture capitalists realized too late that the bank could not meet their liquidity obligations because most of their funds were tied up in government bonds. What happened to SVB is now known as the second largest bank failure in US history and the largest since 2008. And in Europe, Credit Suisse fell because of distrust caused by bank failures in America. Decades by mismanagement, scandal, and bad bets led the Swiss authorities to orchestrate its rapid takeover by UBS. The Federal Reserve, Federal Deposit Insurance Corporation, and Treasury Department guaranteed all depositors of these failed banks to full access to their funds. This is a surprise move as FDIC usually only insures up to $250,000 per account. So let's get down to business. What's the impact of the 2023 bank crisis on Chicago? While none of the banks that fell this year were based in Chicago, they have massive reach in Chicago's business sector, the stock market, and the mortgage rate conditions. Many Chicago companies were affected by the collapse of the mentioned banks. These include the Chicago restaurant chain Fry the Coop, Andy Swim, Cirque Estate, Etsy, Farmbox RX, Full X Health, Rippling, Roblox, Roku, Summer Health, and Wyoming. Small businesses connected to the tech industry as gig workers were also affected by the stoppage of cash flow. Around the world, stock prices declined as investors were alarmed by the bank failures. For instance, fears about the state of the sector led to a dramatic decline in the bank stock, with Santander down 7% and Commercials Bank of Germany plunging more than 12%. Following the failure of Silicon Valley Bank and New York Signature Bank, mortgage rates have decreased by almost 50 basis points. According to Mortgage News Daily, the typical rate of a 30-year fixed-rate mortgage dropped from 7.0% to 6.57%. Lawrence Yun, chief economist of the National Association of Realtors, said the Silicon Valley Bank failure, along with a few other banks, means that the Federal Reserve cannot be so aggressive in raising its short-term investment rates. Therefore, mortgage rates will decline. Mortgage rates lately have tended to follow the movement of Treasury yields, which are falling. If rates tend low, more home buyers and investors could enter the market, especially when there are job additions to the economy. This makes for an opportune time to refinance your mortgage to make it more attractive for your real estate portfolios. Real estate investing is always in. Given all of the turmoil in the stock market and banking industry, you might be wondering, why does real estate have longevity over other investments? Real estate investments provide a hedge against inflation because the asset's value on average increases at or above the rate of inflation. Rents can be adjusted over time to account for variations in the inflation rate, and overall real estate investors get stable cash flow, tax breaks, equity building, and competitive risk-adjusted returns. So as always, you can find a link below to schedule a free consultation with me. What do you think about the bank crisis? Share your thoughts and experience below in the comments. Thanks for watching, and as always, where's your future?